Hello and welcome to part 3 of our webinar, Are You Ready to Start a Business?, which is brought to you by the Raleigh chapter of SCORE. My name is Dennis Weldon and I am a small business mentor with the Raleigh chapter. Let's take a look at the topics we'll cover in part 3. First, we'll talk about cash flow, capitalization, and commingling of funds. Then we'll talk about the business plan. And finally, we'll talk again about how SCORE can help you with a little more detail. Now let's talk about financial statements and accounting. Financial statements are very important to help you start, grow, and control your business. And of course, they're also important eventually to be able to submit your taxes properly. For a startup business, the chief financial statement that you'll need to focus on is the cash flow statement. And since most of the people that attend our workshops are starting a business or haven't quite started yet, in this workshop we are going to focus on the cash flow statement, and I'm going to show you how they work. Now, if you're an ongoing business, the most important financial statements are the balance sheet and income statement. And if you need help with those, set up a mentoring appointment with us and we will be happy to help you. Now, as far as accounting goes, you need to set up a properly defined accounting system to ensure you can generate accurate management reports and properly complete your tax returns. Many people like to use an application like QuickBooks if they don't outsource their accounting and bookkeeping. If you use QuickBooks, it's recommended that you get professional assistance with somebody like a CPA to set up the initial chart of accounts. Now, many of you may not be familiar with the chart of accounts, but it's a simple concept. Let's say that you set up a chart of accounts. It's just basically a set of numbers, and you can track the different financial transactions that you have by assigning those numbers to each of the transactions. For example, let's say you set up revenues as number 100, and under 100 there is a subcategory, and if let's say you have a women's clothing store, and under the 100 revenue section of your accounting system you show women's blouses as a subheading 101, and women's slacks as 102, and shoes as 103. And likewise, you may set up the expense items under the heading 200, and 201 might be salaries, 202 might be the lease payments that you make and things like that. So that's really all a chart of accounts is, and you need to make sure it's set up properly. Many CPAs have told us that people try to use QuickBooks on their own and they haven't set up the chart of accounts properly, and sometimes these people have to get assistance from a CPA that takes hours and hours to try to undo all of the financial transactions they put into QuickBooks and to sort them out so they can both get good management reports and submit their taxes. So clearly, spending a short amount of time up front with a CPA can help you set up QuickBooks, and then you can do QuickBooks on your own if you wish. But if needed, get professional assistance with accounting and bookkeeping, because frequently we've had clients that have tried to do this themselves, and it takes away a lot of time. It can take away a lot of time from the core part of their business, whatever it is, and so it may be the kind of thing you want to outsource. Now, when you are going to a lender to try to get a loan, these are the things that a lender will look for when they're looking at your request. They're going to look at your experience in the industry and the type of business you're starting. They're going to know what capital you're going to put in. They're going to want to know how much money you're going to invest on your own. And usually they expect you to put up 20 to 30%. They're going to look at the collateral you might have, the fair market value of any securities or assets that you have you can offer to guarantee repayment. They're going to look at your capacity to repay, the projected cash flow that ensures that you'll be able to repay the loan. They're going to look at your character, your business track record, and if you do not have previous business experience, they're going to look at your personal credit score. And finally, they're going to make sure that you have a solid business plan. Now, as far as cash flow projections are concerned, lenders are going to want to see, for startups, the 3-year cash flow projections with the first year shown by month. For existing businesses, they'll want to see 3 years of your business and personal tax returns. Now, if you go to the Raleigh Score website, we have a cash flow template that is approved by the SBA, Small Business Administration. So again, go to that same tab that I mentioned before, raleigh.score.org, browse the library tab, and look up the monthly cash flow template. Now let's talk about the cash flow projections. Now, cash flow is basically looking at the cash in this case, $10,000. That would be revenue you take in. And then the cash out, your expenses, which in this case are $8,000. So you would have a balance of $2,000, which is a positive cash flow. And basically, over time, you want to start out with a cash flow that is up here. And before you start your business, before you actually open up, you're going to be drawing down on the amount of money you have, because you'll have to be setting up the business, getting supplies, hiring people, things like that. And over time, then your cash flow is going to reduce month by month until you open your doors and you start making revenue. And when you start getting revenue, you will then hopefully start getting a positive cash flow, and month after month, your account balances will start going up and up and up. And we'll go through that and show that in more detail. So that is a negative cash flow where those balances are going down, positive cash flow where they're going up, and starting out, as I said, you'll have a negative cash flow. So we're going to look at an example of the Acme Widget Company. Now, this is a cash flow statement that I designed myself to show people not only on this workshop, but I also use it with my clients. It's a little bit different than the Small Business Administration cash flow statement, but it works basically the same way. But there's one thing that I put at the top that you won't find in the Small Business Administration cash flow statement, and that is the sales section. Usually, when you see an SBA website, the SBA cash flow statement, it just has the cash on hand, which shows basically the revenues that you get in, or the cash on hand here is the initial loan that you get for your business. Cash receipts would fall in the blue section here, in this case, when you're selling widgets, whether they're basic widgets or deluxe widgets. And then expenses are further down. Now in this case, because the spreadsheet is pretty large, I split it into two pieces. Both pieces are essentially the same, but on this first page, I've exploded these lines here to talk about revenue, and then I've compressed the expense lines here. When we go to the next page, you'll see that the expense lines are exploded and the cash and cash receipts lines are compressed. So the thing here that you want to look at, which I stress to my clients, are the number of sales in units that you sell, because it's difficult when you're developing a cash flow statement to simply estimate the amount of revenues you will have in month 1, 2, 3, or whatever. That's why I like my clients to think in terms of sales of units of whatever it is they're selling. Keep in mind in this case that month 1, 2, and 3 for the Acme Widget Company shows no sales because they're setting up the factory to make widgets. Basically, again, the basic widgets, which will cost $1 per unit. Which will be priced at $1 a unit, and the deluxe widgets, which will be priced at $2 per unit. And they don't have any sales in months 1, 2, or 3. Therefore, you can see here in the revenue section, there is no revenue coming in. So basically, for a few months, they'll be drawing down the initial loan of $1,000 that they have. So, month 1, pre-opening, no sales, no revenue, The total cash available with no revenue is still $1,000 based on the loan that they got. They have expenses of $2,000. We'll see the expenses on the next page. So their cash position at the end of month 1 is $800. So it's the 1,000 less 200. Now, the beginning cash on hand at the beginning of month 2 is this number, the 800, which now goes up to the beginning of cash on hand for month 2. Again, no sales, no revenue, more expenses, so their cash on hand now drops to $550. Same thing here, the $550 goes up to cash on hand, no revenues, more expenses. Now they're down to $300 in terms of their cash position. So as you can see here, they have a negative cash flow that we talked about on the previous page. Now in month 4, the business opens and now they're selling widgets. They sold 100 of the basic widgets at $1 a piece. So take $1 times 100 and they have $100 worth of revenue. They sold 50 of the deluxe widgets at $2 a piece. So the revenue there is also 100. So now you take the starting cash on hand of 300, add 100, add 100. So the total cash available now is 500, but they had expenses of 300. So the cash position at the end of month 4 is 200. So they're still in a negative cash flow position. So the same thing occurs for months 5 and 6. They sell more of the widgets and they have more revenue, therefore their expenses are still going up a little bit, but look what happens in month 5. The cash position levels off. It's no longer going down. They had 200 in month 4. They still have 200 left over at the end of the month in month 5. And in month 6, they start to turn cash flow positive. They have more money at the end of month 6 as they had at the end of month 5. So that's basically how the cash flow statement works. Once you understand the mechanics of it, which I just showed you, I think you'll find it fairly easy to use. The difficult part of the cash flow projections is how you come up with the numbers that go in the spreadsheet. That's the difficult part, and again, SCORE is always here to help you to do this. I had one client that we reviewed the cash flow statement about 10 times over and over again until she and we were comfortable with it. So we can help, and I suggest that if you need help, come and see us. So let's look at the second page of this spreadsheet where the expenses are exploded. And here you can see again, the sales at the top are still the same as what we just saw in the previous part of the spreadsheet. The cash available line is exactly the same, but here you can see the expenses. Now, we talked earlier about the variable costs and the fixed costs, and we can see those here. The lease on the building is the same month after month after month, so that's a fixed cost. The building fit-up costs are the costs that they needed to get the manufacturing facility ready to start producing widgets. So they had costs in months 1 and 2, but nothing in the out months. They had insurance, and of course that's a fixed cost. Raw materials, the steel that they need, I mean everyone knows widgets are made out of steel, so they needed to buy the steel, and the amount of steel that they need increases with the number of widgets that they make, and so therefore this is a variable cost. The manufacturing equipment that they need at first is a fixed cost because they set up the manufacturing facility, and after that they just have to repair that equipment, but it doesn't change as far as the volume of the products that they produce. Next you see employee salaries and owner draw. Now if you have an LLC, which this is, the amount of money that you take personally from the business, which is your salary essentially, it's called owner draw. If you have a corporation, it's just called salaries, I believe. They have a loan payment that starts in month 2 because remember, On the previous page, you saw that they had a $1,000 loan, so they're paying off the loan, and they have some website design, setup costs, and other things here. And here are the cash position month by month numbers that we saw on the previous page. So that is basically how the cash flow statement works. So I hope you're all comfortable with that. Now let's talk about the types of financing. Loans are the most common way of financing small businesses. You borrow the money you need to finance operations and growth. And these can be through personal loans, credit cards, home equity loans, business loans from the SBA or lines of credit, and then operations related financing. Most of our clients don't get into this, but a few here and there do, supplier credits or lease financing. Most of our clients do not use equity funding, but you can do that. If you watch Shark Tank, you know a little bit about that. You sell a partial interest or ownership in your company, and in return, you share some of your profit with the owners. There's no requirement to repay a loan in this case, but the equity partners will take a share of the profits. A few years ago, a few of our mentors met with some clients who wanted to do crowdfunding. They came up with a very interesting idea. It's called the Tim Perfect mug. This is basically a coffee mug that had an outer shell and an inner shell and some kind of a fluid in between the two linings. And when somebody would get hot coffee and pour it into the Tim Perfect mug, the mug would cool the coffee down so it's not too hot to drink. And then over time, as the coffee got cooler and cooler, that liquid inside between the two shells would then heat up and it would warm up the coffee to a warmer temperature. Very interesting concept. These fellows were from North Carolina State University. Now, they started out on Kickstarter with a goal of $23,500. They got $269,000 from 4,903 backers. An amazing story. They came to one of our SCORE meetings about a year ago, and they talked about the process of going through crowdfunding and starting their business. And this is a good example for many of you. They thought they would start the business in a year or two, and I think so far it's taken 4 years or more. They are selling the Tim Perfect mugs now, however, and they just talked about how difficult it was. Even if doing crowdfunding, it's not just a matter of putting a video online and then just sitting back and watching the numbers come in. Apparently it takes a lot of work, a lot of marketing of yourself and your business to get people to go to the website and actually contribute money. An interesting concept. Some of you may be interested in SBA loans. Small Business Administration sets the guidelines for SBA lenders and loans, but the loans are actually provided by banks or community development organizations, credit unions, or micro lenders. The SBA generally guarantees between 50 and 85% of the loans, while the banks assume the remainder of the risk. Depending on the situation, if you default on the loan, you may still be personally liable, and the bank will follow its usual policies and procedures to ensure that the collateral can repay the loan. So if you think you can default on an SBA loan and not be penalized, you need to think about that, because they will try to get their money back from you. You should check with your bank or several banks if you need to find one that has an SBA loan officer and discuss the SBA loan products. Not all banks have SBA loan officers, but you can go to the SBA website that's listed below there, and there's a lot of information about the types of loans that they have. Now, one thing that's important to think about, and it's a fairly simple concept, but you really need to pay attention to it, is commingling of funds, because it's a liability issue. Now, remember earlier we talked about the corporate veil. If you have an LLC or corporation that blocks the people that want to bring lawsuits against you from taking your personal assets, although they can take your business assets. So even though you have an LLC and the corporate veil is there, if you commingle your funds between your business and your personal life, there's the appearance that the corporate veil is not there, and they can do something that's called piercing the corporate veil. As you can see there, the brick wall has a hole in it. So what is commingling? It's having only one bank account for both personal and business needs, or writing checks for personal expenses, or writing personal checks for business expenses, or depositing business checks into your personal bank account, or transferring money between business and personal accounts without documentation. But it's easy to avoid all this. Just once you have your LLC or your corporation in hand, go to a bank and set up a small business bank account for handling just your business finances, for business checks, debit and credit cards, and only use that bank account for business purposes. Now, of course, if you do that, you want to be able to take money out of your business. If you're making a lot of money, you have positive cash flow, and you want to have the money from your own personal salary, the owner draw that we talked about, or you want to just take money from the business and put it in your personal savings account. You can certainly do that. All you need to do is document the transactions to move funds between your business and your personal accounts. Like if you're writing a check from the business and you want to deposit it in a personal account, just write on the check that this is owner draw. Or likewise, if you do it online, the same thing. And of course, the same thing if you want to put money from your personal account into the business as a loan to the business, do the same thing. Just document that this is a loan to the business from your personal account, and that'll take care of it. Okay, now we're going to talk about the business plan. Now, here are two typical examples of mentors working with their clients. In the top cartoon there, the SCORE mentor says, "Great plan, but could we get some more details?" We do that a lot when we're SCORE mentors. Your SCORE mentor may also say, "Would you say that the sales projections in your 3-year plan are realistic?" Again, the topic that we often talk about with our clients. So what is a business plan? A business plan is a guide for your business that outlines your goals and how you're going to achieve them. There are several types of plans that you can find on our SCORE website if you haven't started a business plan on your own yet. If you haven't started one, we suggest that you start with a simple one-page business plan that you may spend only an hour or so completing, but it just helps you to start forming your ideas for your business. There are other templates out there too, like the business canvas, the business plan canvas. There's another one. I think you have to pay for it compared to our simple one-page business plan, which is basically just a list. And then as you get going and you need to get into more detail, you should then go with the full business plan, typically 10 to 20 pages in length. Will show you how to start and manage your business. And again, the templates are on our website in the Browse the Library tab. So go in there and pull those down and start using them. Now, who is the business plan for? Well, first of all, it's for you, because it helps you to write down the things that relate to how you're going to start and run your business. If you can't write them in a lot of detail, then chances are you're going to be winging it and you have a lower chance of success. It's something lenders, investors, suppliers, and landlords may want to see. Certainly lenders will. And the other thing is, it's something that your team will want to know because they'll want to be able to help you achieve success. I have one client that has 2 offices in India, and we helped them develop the business plan, and we had a conference call with their staff in India, and the CEO went through the business plan with his staff and got input from them both before he developed the business plan and after it was completed. So this is a list of what is typical in the business plan in terms of the contents. The executive summary first. Now keep in mind the executive summary is something you should write last. You need to get all the details in there first and then go through all those sections and think about what things are most important for the executive summary. In many cases, the executive summary may be the only portion of the business plan that a banker may look at, so you want it to be very good. You'll want to give the general company description. We talked about that in part 1 of this webinar. And the products and services, of course, the marketing plan, the operational plan, management and organization, and those two parts, 5 and 6, we didn't talk about too much in this webinar. You want to show them the startup expenses and capitalization, and if it's a startup business, of course, the cash flow statement, and the details of the financial plan, and an appendix if you want to add things like sales brochures and things like that that people may want to look at. So the business plan should be considered confidential. It's a living document. It's normally updated by most businesses annually. And again, if you go to the Browse the Library tab for SCORE, you can find the one-page business plan and a business plan template for a startup business, which is very good because it not only lists the chapter headings, but it gives you a lot of questions to answer. So rather than just looking at chapter headings and blank space below that you have to figure out how to fill out, you can just answer the questions and that'll help you fill out the different chapters. And you may also want to search the web for business plan templates specific for your type of business. Now, we aren't covering any more about the business plan than I just mentioned, but keep in mind that this entire workshop has been structured to go through essentially the parts of the business plan. So you are already somewhat familiar with what goes into a business plan. So that should make it easier. Now, just to finish up, a little more about how SCORE can help you. This is the homepage of our website, and I've spoken several times about it. These are the main tabs at the top. Find a mentor. Remember, if you want to get mentoring help, go to this tab here. Take a workshop. I mentioned that earlier. It has a list of all of our other workshops, some of which are marketing related, both local workshops of which are now online, or national workshops that cover a wide range of topics. And of course, browse the library where you can find all these templates that we've talked about. And hopefully, if we start mentoring in person again, you can go down here to mentoring locations and you'll find where we hold our mentoring sessions. And we're hoping that that starts up soon, but we don't really know. As I said before, mentoring sessions are free and confidential. There's no limit to the number of sessions. Typically, you'll meet with 2 SCORE counselors, but now if it's a Zoom meeting or a telephone call, it'll probably be just 1. We encourage a continuing relationship between the clients and counselors. And keep in mind, we advise you and suggest things and direct the work, but we do not do the work for you. And we do not provide legal advice, accounting, or other professional advice. And that's what our provider list is for that I mentioned earlier. Now, here's some good small business resources, and I just wanted to point out the first one is very, very good. It covers all the things that we talked about today in much more detail. I would suggest at a minimum that you just take a quick look at that and see what it's all about. In particular, there's a lot on marketing there, and it's a SCORE document that's very good. And some of the other websites that are shown here are ones that we talked about earlier today. So, starting a business is not going to be easy. You need to be prepared to commit. You need to be prepared for sacrifice and surprises. It doesn't always go the way you expect it to, but hopefully it will be rewarding. It's your business. You get to live your dream, and hopefully you'll have independence. And don't be afraid to ask for help. So that ends our third and final part of our webinar. Remember, SCORE is always here to help, and we wish you well as you pursue your business dreams. Thank you.